If you want to invest like the pros, I've got some good news for you. Every 3 months, institutional investors need to disclose their trading activity. This includes Warren Buffett and the holding company he's managed since the 1960s, Berkshire Hathaway. In its latest disclosure, we learned that Berkshire Hathaway bought more than $4.1 billion worth of Taiwan semiconductor manufacturing shares in the third quarter. It ranks 9th in Buffett's holding camp, and the first is Apple. This is more than a little surprising because Berkshire doesn't have a history of acquiring chipmaker stocks. In fact, in Berkshire's 2008 annual report, Mr. Buffett went so far as to say he preferred simple businesses. "We won't understand it," he said. Moreover, the industry as a whole has been reporting relatively weak demand from electronic device manufacturers. Why do Buffett and Berkshire find TSMC stock especially attractive during what appears to be a rotten time for its industry? In addition, this incident has also caused concern in China. Because Buffett has always had an investment tradition of preferring to invest in American companies, he rarely invests directly in overseas companies. In addition, the time when Buffett announced his investment in TSMC was just before the celebration ceremony of the arrival of the first batch of manufacturing equipment to the factory at TSMC's Arizona plant. The timing of the two events was very coincidental, more like a deliberate arrangement. This may mean that TSMC's talents, technology, and equipment are being transferred to the United States. In the future, TSMC may become an Americanized company. Is it true? Okay, as for today's video, let's dive deep into this issue. Will TSMC really become an American company? In fact, such concerns are not groundless. As early as 2 months ago, some scholars issued a warning: the United States had a precedent of immigrating German scientists to the United States during World War II. Therefore, the United States is likely to follow suit. Through a series of operations, TSMC will become an American company in the end. As Buffett holds shares in TSMC, TSMC has become more and more Americanized at the capital level, but the urgency of the matter is far more than that. On November 9, it was reported that TSMC will announce in the future that it will invest another $12 billion in the United States to build a 3nm fab. TSMC neither admitted nor denied this. This has led many to blame the current TSMC chairman, Deng Liu, because according to TSMC's previous plant construction plans, the most advanced process technology is to remain locally in Taiwan, and TSMC plants in other regions tend to lag a generation or two behind to ensure the competitive advantage of TSMC's Taiwan plants. This is a bottom line that Morris Chang has drawn for TSMC. But this bottom line is also starting to waver. If TSMC really wants to build a 3nm factory in the United States, it means that TSMC's advanced manufacturing process is not limited to Taiwan, but also expanded to the United States. This will further turn TSMC into an American company, and some industry insiders have pointed out that it would be a tragedy for Taiwan if TSMC is controlled by the US. However, being an American company is still a pretty good ending for TSMC. In fact, there is a worse ending. As TSMC went to the US to build a factory, the US will begin to obtain a lot of confidential information and technical documents of TSMC if the US backhandedly cancels the subsidies for TSMC and instead supports Intel and other US domestic fabs. At that time, in the face of such unequal market competition, TSMC is destined to have no power to fight back. Obviously, the probability of this ending is very high. As Morris Chang said, TSMC is becoming a battleground for military strategists. Then, why Buffett likes TSMC stock? Buffett is famously a contrarian investor who takes the long view. He often places large bets on cyclical businesses while they are in the more depressing portions of their respective business cycles. Right now, the semiconductor industry as a whole is taking a step back amid relatively soft demand for electronic devices. For example, South Korea recently reported a 29.4% year-over-year drop in semiconductor sales during the first 20 days of November. The semiconductor industry as a whole may be feeling under the weather, but TSMC's semiconductor foundries have advantages that are keeping them in demand. It's one of just a few companies that can produce chips that are just 7 nanometers or 5 nanometers wide. While the industry as a whole was taking a step back, TSMC reported third-quarter sales that soared 48% year-over-year and 15% compared to the previous quarter. TSMC's advantage when it comes to manufacturing smaller chip designs is about to get much stronger. Delivery challenges with its tool supplier have slowed down its rollout of 3nm technology, but the company expects to start mass-producing at this size in the second half of 2023. So, a smart buy now? Recent news that Berkshire is now a shareholder helped lift TSMC stock off from its 52-week low, but it still looks like a bargain at more than 40% below the peak it reached in January. TSMC's current earnings multiple is appropriate for stocks growing their bottom lines by a low single-digit percentage each year. If TSMC weren't miles ahead of its competitors when it comes to making highly advanced chips, its valuation would make sense, but this isn't the case. Chip designers are still beating a path to TSMC's door to get their 5nm products built, and they are even more excited about the company's capacity for 3nm production that will begin next year. Despite a challenging environment for the semiconductor industry overall, TSMC reported third-quarter net income that rocketed 80% higher year-over-year. There are no guarantees that it will continue outperforming the competition, but the company has a clear lead in the lucrative space for tiny chips that looks unassailable for at least another 5 years, and possibly much longer. At recent prices, TSMC's American depository receipts, which are essentially shares of a foreign business that trade on U.S. exchanges, offer a 2.1% dividend yield. Investors will be glad to know the company hasn't reduced its payout in its own currency since implementing an all-cash dividend program in 2009. A global recession brought on by soaring interest rates could cause markets to tank and drag TSMC down further than it's already fallen this year. Receiving a steady payout from quarter to quarter will make it a lot easier to hang on for the long run and come out miles ahead, the way Buffett does. Put it all together, and TSMC looks like a very smart stock to buy now. At last, let's back to the current situation of TSMC again. It can be clearly seen from these data that a large part of TSMC's current revenue depends on these US companies, and the initiative is not in its own hands. If one day these US companies interrupt cooperation, then TSMC's revenue will be worrying. All in all, as the center of semiconductor manufacturing gradually moved to Asia after 2000, the local chip manufacturing industry in the United States had to reduce labor expenditures in order to compete with the semiconductor manufacturing industry with lower labor costs in Asia. The number of students willing to pursue related majors has declined further because of lower wage returns, which has further prompted the chip manufacturing industry to move to places with lower labor costs, such as Asia. After more than 10 years of such a cycle, the current talent pool in the semiconductor manufacturing industry in the United States is very small. However, the reality is, as we have seen, that semiconductor manufacturing has once again returned to the United States. So, do you think TSMC will become an American company? Okay, that's all for today. Please put your comments below and share your insightful ideas. Your precious time with us is highly appreciated. See you.